And after taking out the November lows, the S&P bouncing back to end the day nearly flat as well. The Nasdaq closing the day in the green, up about 0.5%. Pete, what do you make of the action? Is that what a bottom feels like?
It sure feels a lot like that, yeah. I mean, the turn that we had was amazing. And the fact that we saw that spike in the volatility where we got up, and we've been talking about it for a long time. When is volatility going to get one of those absolute explosive days? Well, we certainly got that today. As a matter of fact, volatility started coming back before the market started to rise, Scott. So that was something interesting as well. We got up near 26, then we started to pull back, and as we were pulling back, then the market started to catch up with that, and then we saw this big move to the upside. It was Nasdaq, though, that really did lead this first. Whether you want it, the FANG names, the MAGA names, whichever ones you want, the technology side really was what started to push this market back up to the upside.
Bottom in? I mean, that's the question everybody wants to know tonight. Is that the kind of activity, Dan, that says got a bottom?
Well, you're asking the wrong guy for a bottom.
Down 1,500 points.
Guys.
That was down 1,500 points over 2 days, okay?
Point. That was a massive intraday reversal, and it was led by the right names. It was led by MAGA, Microsoft, Apple, Google, Amazon. Now, Apple didn't really participate much to the end, but it was down the most of all those guys. Yeah, no, I mean, it was huge, okay? So here's the thing. We might be trading in this range, a couple 100-point range, in the S&P for a couple weeks now. We know we have a budget showdown. We know that we have this Fed meeting on December 19th. There's a couple massive catalysts. So I think we're going to see this volatility for the next couple of weeks until we get some more clarity from the Fed.
But volatility implies just that. You're saying we got a bottom here tells you that we resolved some major issues that are still very much unresolved. Bottom line here is you've got the sixth test now of 2,600 on the S&P. And meanwhile, the 3 C's of credit, crude, and
curmudgeon.
Third.
Pete.
I had another 3.
I'm not sure what the third is.
Crude, credit, and the curve. Look, bottom line, let's talk about bonds, because I think what turned this market around today was really the bond market. Remember, the 10-year bond and yields went from kind of 305 to 282 on the intraday. Yeah. We were as overbought on 10 years or as oversold on yields as we've been in over a decade. So again, to say that people had overreacted to the other side, I think they had. Obviously, the Fed has been out in the last couple of days and given some people some sense that they're probably more data dependent than they had been.
Journal says, Fed mulling a slower approach. You have the Bostic comments later in the day, which seem to help stocks. What's your view on where we are?
Well, definitely dovish comments. So that was good. But, I think we were down. We reversed all of the positive from China, from the G20 rather, all of the positive from Powell becoming more dovish. We reversed all of that. And I look at where we are in China now, post G20, this arrest, I think that is not going to go unanswered. So I think that we're in for more bad news on the tariff front rather than good news.
I think that was really a big reason why the market was down the way it was.
Absolutely. Overnight, I believe that
Totally agree with you. It flipped right when that news hit, Scott. We were actually trading positive, and suddenly we rolled to the downside. And what's the news out there? That was the only news out there. I mean, if you looked around, what else was actually moving the market? And suddenly we were down a couple hundred points from being up over 100 points in the after hours.
What about this whole notion, though, that we're making too much of everything? Making mountains out of molehills.
That's a mountain, kind of. I mean, just think about it. That's a pretty aggressive move.
It's a mountain relative to this trade dynamic. And I don't think you can underestimate the trade dynamic. I think there's someone that could be watching these markets and say, sure, the market has got a schizophrenia that we haven't seen for a long time. But when you consider the fact that the entire world has shut down, look, we got ISM numbers out today that were absolutely fine because it's a services ISM. But if you look at the input orders numbers we've had from around the world, everything we're hearing from companies, the Beige Book yesterday, look, you're quickly seeing companies adjust, and everything good we did fiscally, I think, is being unwound. And that,
you asked an interesting question, like people making a mountain out of a molehill. We heard the Toll Brothers CEO say that, well, the media is causing this crisis in housing, talking about weak housing number. Leon Cooperman, what did he say to you at 12:30 today? He said, you guys, as soon as you do that special, we turn. It's like everyone's looking at us and blaming us. It's fine if you guys want to blame me. That's fine. But these guys, what I mean?
I'm saying,
no, but it just seems like there's a lot of that right now.
You go from the yield curve is flat to, oh my God, we're going into recession tomorrow. Yeah. That's the sort of feeling that's permeated the market.
But isn't
it the worst case scenario across the board?
So I say this all the time. Okay, so if the consensus is that it's going to take 12 to 18 months from when the yield curve inverts, the 2s and the 10s, to have a recession, to a recession, why don't you want to hear a contrarian notion that maybe it could happen much sooner than we expect? And I think that's what risk assets have been telling us over the last couple of months, that maybe it's not a 2020 thing. Maybe it's a mid-2019 thing. And then when you start looking at global growth, you start looking at the, we're not having these tailwinds from fiscal stimulus anymore. Maybe it comes sooner. And why don't you want to hear that?
I think you should hear everything.
Yeah.
But the point that Lee Cooperman was making today, and he came on right at 12, said very positive things about where he thinks we are from a buying opportunity standpoint.
Sure did.
Also thinks that people are too negative. Let's listen to Lee Cooperman, and we'll talk about it on the other side.
In my 50 years of doing this, what do I look at? I look at the economy. I look at inflation. I look at monetary policy. I look at valuation. I look at bonds versus stocks. And everything comes up, saying it's a great buying opportunity.
Where's he
It
wrong?
was a calming voice today,
Yeah,
right?
at a much
when
needed
everybody's
time, by the
screaming,
way.
and yeah, when we came on, we
Near
were
the
close
bottom
to
today.
700 points down, just off the bottoms of the day.
Yep.
And Lee started to speak, and then suddenly it's almost as if everybody listened. Right? I mean, what he came out there with, Scott, was he talked about something I've been hitting on for a couple of days now, algorithms, the uptick rule, and some of that. And I understand people could say, well, you don't have any of those things that are holding you back on the way up. I still think you've got to have something on the markets on the downside to hold that in place, give stabilization to the marketplace. The uptick rule left in 2007. I still think that's something. Lee talked about that as well today. But he also talked about, hey, look, there are some great opportunities out there, and I totally agree with him. As a matter of fact, I bought one of his names today. I'm going to be pitching that later on tonight. But it's really interesting to see. I try to tease these things out. But it is amazing because I think his calming voice came in and said, hey, look, there are opportunities being created by the fact that we are seeing these massive moves to the downside.
Let's not forget, Kara, buying the dip has not worked of late, right? You've had all of these
since the last 2
gyrations,
months,
right? In the
yes.
last 2 months, all of a sudden, buying the dip hasn't worked.
Right.
Lee suggests that now's the time to actually buy the dip. Is it going to work this time?
Well, I mean, Lee's outlook is long-term, and he doesn't really care, I think, if he has a lot of volatility in his portfolio in the short term, right? So I think he'll probably be right. I mean, I'm always long biased, and, it's been a difficult 2 months. But it's interesting you listen to Jamie Dimon or you listen to Brian Moynihan the other day talking about the strength of the economy.
Everybody who came on today from D.C.
Right.
with Becky,
Yes.
one after the other.
Very positive. I think, though, that tariffs and trade is what moves this market. I really do. And I do not think we are in the clear at all. And I also think uncertainty moves this market. If we had a tariff deal, trade deal, even if it wasn't a great deal,
I also think
that would be better for the market.
Yeah, but I think if you think, again, about positioning and where are people complacent and maybe people are overreacting, certainly on a minute and a day-to-day, look, we traded off on effectively 2 days. So from the peak of the first trading day after Thanksgiving to the lows of today, we traded off 6.5% in essentially 2 sessions. That's an oversold condition. I don't care what anybody says. Of course, at some point, people need to step in. But I just think if you consider the dynamics and back to technicals, I'm not a technical freak. I use them at least as a tool along with everything else. And to be clear, we broke down technicals on 2 to 3 year trends in a couple of major asset classes. The DAX today broke an 8-year uptrend. You've actually seen, as I talked about, oversold conditions that really indicate you could have even
oversold isn't reason enough for a bounce, right? You need a catalyst. And maybe we got a confluence of catalysts today. It's Cooperman, it's Diamond.
It's the Fed.
It's the Fed.
It's the Fed.
Everything is sort of a calm, hey, I think maybe we're making too much, their opinions, of an economy that's falling out of bed, a Fed that's getting too aggressive, the trade skirmish that Diamond said,
hey, listen,
not a war.
I think yields told us this over the last couple of weeks, that a more dovish Fed is not particularly bullish for equities. And I really believe that. And I think that you may have this kind of knee-jerk reaction into December 19th off of this older oversold condition. But I'm not sure once we get to December 20th, that's going to be a real bullish thing if they wait in December and push it out.